Welcome. In this video, ZBCN coin, is the decline over? Is the rise coming? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Careful examination of the chart shows that the price has been moving in a downward channel for a long time, and that the peaks formed at regular intervals during this period have formed a falling trend line. In particular, this trend line is not only visually strong but also technically strong. This is because the trend line was touched numerous times, and each of these contacts was taken seriously by market participants and perceived as resistance. This is an important indication that the falling trend line is seen as a defended level by sellers in the market. The more contacts a trend line receives, the greater the validity of that line. In this context, falling trend lines with multiple contacts become critical technical barriers for traders. This is because these levels are areas that have repeatedly pulled the price down in the past and failed every upward attempt. Therefore, when the price approaches this line, it often leads to a clash of two main emotions for traders: fear and hope. Some traders close their positions expecting another sell-off from this line, while others start looking for buying opportunities in anticipation of a strong uptrend after a possible breakout. Such breakouts are usually accompanied by an increase in volume, because in a market that has been dominated by downward movements for a long time, a break of this line, which acts as resistance, causes buyers to be encouraged and new positions to be opened. At the same time, traders holding short positions will be tempted to close their positions when they see this breakout, putting extra upward pressure on the price. Therefore, in technical analysis, a break of such multi-contact falling trend lines is often considered a trend reversal signal. The behavior of the price after the breakout is also very important. Most of the time, the price returns back to the broken line. This behavior is called a retest in technical analysis and is critical to understanding whether the breakout is fake or permanent. If the price manages to hold on to the trend line during this retest, this line is no longer resistance, but support. This is a confirmation that the direction of the market has officially changed and allows traders to open trades with confidence. Psychologically, such breakouts also cause significant changes in investors. Where the market previously faced selling pressure on every upward attempt, now that it has broken through the resistance zone, buyers are emboldened and the overall market mood shifts in a positive direction. This means that a trend has been broken, not only technically, but also emotionally, because investors now believe that the downtrend is over and a new uptrend has begun. This belief causes both individual and institutional investors to participate more actively in the market. In addition, a break of a multi-contact downtrend can also be a trigger for algorithmic and automated trading systems. Since many algorithmic strategies open trades based on specific technical levels, such breakouts can systemically generate a large amount of order flow. This can lead to sharp moves following the breakout. To summarize, in technical analysis, downtrends represent the downward movement of the price, and the fact that these trends have received a large number of contacts makes them technically more reliable. However, an upside breakout of these lines is considered an important sign of technical reversal, especially in a scenario like the current one, when the price is close to the multi-contact falling trend line. Indicators are generating positive signals and volume increases are observed. This structure can be an important opportunity zone for investors. The movements after the breakout should be carefully monitored, and potential upside scenarios should be considered as long as the broken area works as support. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. One of the notable elements on the chart is the strong technical level located just below the short-term sideways price movements. This level has repeatedly held during past downward attempts, consistently attracting buyers and acting as a key area of interest. In technical analysis, such a zone is referred to as a support level. Support levels are areas where a falling asset price tends to reverse direction and rise again due to increased buying interest. The fact that the price is currently hovering near this level suggests that market participants are closely monitoring the area and may be preparing for a potential reactive move. Support zones in technical analysis are not just horizontal lines drawn based on past price actions. They also function as psychological thresholds. When investors see that the price has bounced from this level multiple times in the past, they expect similar behavior in the future. This expectation leads to a concentration of buy orders on the order book, forming a technical base. Consequently, when the price nears this support level again, the likelihood of a similar response increases, and the price may once again react upward from this point. Currently, the price appears to be approaching this support level with a noticeable degree of consistency. During this approach, trading volume remains within normal ranges, but some technical indicators are signaling weakness, suggesting that a short-term pullback may be nearing its end. However, expecting a definitive reversal before the price touches or nears this support level may be premature. Once the price reaches or comes close to this support line, it could encounter strong buying interest and experience a technical bounce. A potential reaction at this level could not only present short-term buying opportunities, but also provide insights into the broader market direction. If the price bounces sharply from this region, it indicates that buyers remain strong and the downside may be limited. On the other hand, if this support breaks, the possibility of a deeper downward correction becomes more likely. However, based on the current technical structure, the likelihood of an upward reaction from this level is higher, as the price has repeatedly rebounded strongly from this point in the past without breaking below it. The price approaching the support zone is typically a critical phase that investors should watch closely. The price behavior at these levels is vital for shaping short-term strategies. If technical signals such as bottom formations, wicks on candles, bullish divergences, or volume increases appear after the price reaches this support, it could be a strong indication of a buying opportunity. A possible bounce from the support level generally leads first to mid-range levels, then to higher resistance zones. This development is significant not only for short-term traders, but also for medium-term investors, as it may signal a trend reversal. Support levels are not just temporary rebound points. They can also mark the beginning of a new upward trend. From a market psychology perspective, an upward move from this level can create a general perception among investors that a bottom has been found. This often leads to fresh buying. Especially algorithmic and institutional investors analyze price behavior closely at such support zones, and once they detect a signal, they enter positions that may accelerate the price's upward reaction. One of the most important indicators used in the world of technical analysis, the RSI not only shows investors whether an asset is in an overbought or oversold region, but also provides critical clues for anticipating trend structure, momentum strength, and potential trend reversals. When this indicator fluctuates between certain levels and consistently forms lower highs and lower lows over time, it creates a trend formation within itself. This formation is typically defined as a downtrend and can be clearly observed on the RSI. At this point, the technical meaning of the downtrend forming on the RSI and the potential impact of a breakout become highly significant. In the current analysis, there is a notable downtrend structure forming on the RSI. This structure is represented by a line drawn by connecting the peaks formed by the indicator in past periods, and it typically acts as a barrier that limits upward movements. This line has served as a resistance repeatedly tested by the RSI during times when the price attempted to move higher but lacked sufficient momentum to break through. In this respect, the downtrend line on the RSI acts as an invisible yet highly influential resistance that is not immediately apparent on the price chart. We should wait for the RSI breakout. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.